Yo, yo. Where'd my coffee go? Yeah, sorry, I lost track of time. I was working on today's stock trading course. Oh, the lecture's awesome. Yeah, I guess I got to bring this up. All right. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because, wait for it, trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma! Good to see you. Hey, cheers to Nespresso Pod 9, 10, and 11. Yeah, so hey, today is Wednesday. Oh my God. Oh, so much going on in the world today. Takes everything you got. Anyways, we got lots to do. Tomorrow's CPI, that's a big one. That's a doozy. Today we have PPI. I think, don't we? Yeah, I think we got PPI. So anyways, we got some news going on, and it's a normal part of business. We have risk out there. That's an abnormal part of business. I mean, you have to deal with it. Things like war are exogenous shocks. You can't really plan on a war in advance. So anyway, so now here we are, and we got those risks to deal with, but then we have our normality that we have already planned. So we kind of have to do both, really. So that's why we have a community, so that we can do this together and try to make it calm and intelligent decisions based not just on foresight, but also on economic research. So anyways, My name is Wayne. I've been doing this for 20 years. Before that, I was a venture capitalist. Before that, I was a high-tech entrepreneur. Before that, I worked in the nonprofit world. And before that, I guess I was on my way to being an astronaut. Yeah, worked at NASA, was recruited by the Navy to fly airplanes. And then I decided I want to be your YouTube guru instead. Yeah, cool. Probably, I'm not sure, but not many YouTube gurus have macroeconomic degrees. And if they do, probably not from a school like Harvard, but I bring that. I bring it. Cool, right on. Okay, you know how to pilot? Jordan, when I worked at NASA, I worked as a heads-up research display researcher, right? I was a heads-up display researcher. And so my job was to fly virtual reality simulations before VR was even a thing. So it was cool. I'd get to whatever researcher I was working with, and I'd be the guy they'd put the helmet on. And they're like, do these things, fly these simulators, do these tasks, and we have tests that we want to, see how you deal with it. Very often it was just do your thing and we'll track you. Very often they would give you rules, so you're like, fly and follow this target. I remember this one specifically. And we're going to grade you on how well you fly while you're following this target. So just imagine dogfighting or something. And then they said there's a red button, a blue button, and a yellow button. And like these lights would come on in the cockpit, the virtual cockpit. And, when the red light comes on, hit the red button. But fly against the target. If the red one comes on, you hit that one. If the yellow one comes on. So you do that for an hour or something. And then somewhere along the way, like different colors would come on, or flashing lights, or alarms, and and all hell would break loose. My job was to fly against the target. Can I stay on task and that kind of stuff. I remember that. That was fun. Another one I remember, I worked with, I think 6 or 7 other people. And our task was to dock the space shuttle at the International Space Station. And I was captain. I was chosen to be captain. And let me tell you, that's probably the hardest thing a human can do. I can't imagine anything more difficult than docking the space shuttle, manually of course, at the International Space Station. And it does take the whole crew. And just to show you how complex it is, there's one little window about this big that only one person can see out of, and it's not the pilot. So anyways, yeah. So interesting stuff. But nonetheless, this is how I got here. Maybe it's why I can stay calm and focused and be collected even in times of duress. I was trained to do so. Anyway, so I'm here to help. Let me know. We all bring good, bad, and ugly to the table. It's the sum of our human experience. And then all these things shape and filter the way that we bring in what we're seeing, whether it's the way the markets are moving or how we interpret the fundamentals, our reaction to surprise, all this kind of stuff. It's who we are. I bring good, bad, and ugly to the table, and so do you. But as a community, as an aggregate, we have a lot of good. So thank you for being part of this community and your contribution every day. I know almost everybody in the chat because I've been doing this for 20 years. There's something like 5,000 videos associated with my work on YouTube alone. Yeah. So anyways, so thank you for your contributions. Thank you for being a subscriber and clicking the thumbs up button and all that kind of stuff. Right? We need the thumbs up button. It's not for my ego. It's to try to tell YouTube this is quality content. So let's say like if 500 people watch this stream, wouldn't it be great if there was 300 or 400 or 500 thumbs up clicks? That'd be great. Never seen it, but that would be great. So anyway, so thank you for being here. Hey, if you're looking for a broker, I recommend TradersWay.com. Been working with them, at least 8 years. They're an ECN, which means they don't trade against you. Do you like that? You're like, yeah, that sounds really good. Sweet. Well, they have fast execution speeds, and Johnny says the margin that they require is way better than most brokers. Great. That makes Johnny happy. Great. So anyways, TradersWay.com. Check them out. And then what I wanted to share with you, the reason I was a little tardy, I lost time. I was outside putting the finishing polishes on today's lecture. Lecture number 3 of the stock trading course. There's still time for you to join. You can watch lecture 1. I think it was an hour and 45 minutes. Lecture 2, I think, was an hour and a half. Today, lecture 3, probably an hour. So there's time for you to join and keep up. And I don't know, I think it's pretty good. So one of the things you're going to learn right away is how to do the calculations so you can precisely and accurately predict what you think that stock is worth. What we're going to look at today is then compare what you think it's worth to the risk that you get if you make the investment. Do you get compensated enough for the risk? Is the company overvalued or undervalued? Seems like it's something you should know, right? So we're going to dive into that today. Last time you learned about epsilon and theta. Was it theta? No, sigma. And today we're going to do beta. Nice. Okay, so let me give you that link. I'll put it in the chat. Okay. Okay. Now, Richard says the required rate of return. Well, we already did that. So based on your required rate of return, what, is this particular investment that you're looking at compensating you enough relative to the risk you associated? So your required rate of return is your required rate of return. So if it's less risk, or if it's more risk relative to your rate of return, you will make a decision, good, bad, right? This trade's a good investment. This investment's a bad investment. This investment is as expected relative to the risk. So it helps you make a decision. We're going to quantify it. So you go click, 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 and you're like, this stock is undervalued. I'm interested in buying it. And then this is important because eventually we want to build portfolios. So does it fit into the risk profile of your portfolio? Okay? Cool. Sweet, right? Yeah, I'm telling you, it's not just about picking apple. That might be good, but I'm going to teach you how to make logical decisions. Now, the last lecture was heavy math, but I don't need you to understand the math. I need you to understand the consequence of the outcome of the math so that you could very quickly look at a company. So let's say there's a stock screener, and it gives you all the numbers, and you look at that and you go, look at that number. Forget it. There's no way. So you don't need to do the math. You need to understand, I do the math for you, A, because I can, but B, because it's important you know what the number means. So you look at that stock screener and you're like, oh, that's an interesting stock. And then you go to one column and it says 38.2. And you're like, no, forget it. No way. Absolutely not. Okay. Anyways, neato, as they say. Let's get going. Okay, dollar still weak. Good. That's what we've been expecting. Week 41, the US dollar started weakening. Great. Right on October 1st, by the way, which is exactly the right time. Okay. Yeah, burned. Jim's right. Okay, pound recovering, which is seasonal. We looked at that today in the Quant-in-a-Box. Guess I should show you that. youtube.com/@quantbox. So today at 11 a.m., you can go get today's Quant-in-a-Box video, which I did at 6:30 this morning. So it's already 2 hours old and will be released in a few hours. But nonetheless, you subscribe, at the very least, subscribe. And click the thumbs up button. I'm going to give myself my own like. Okay. Anywho, so we looked at like pound dollar. We may not like the pound. It's a dog with fleas. But this time of year, starting October 1st, yeah, makes sense. And it is going up, so that's interesting. Aussie's got some challenges. Kiwi's doing its best. Okay. Also, we did a group meeting yesterday. The day trading group and the swing trading group met at investorbootcamp.com. And we went over, like, for example, Australia and New Zealand. We went over their recent monetary policy releases. And so we grounded ourselves in their monetary policy, and specifically why the policy is there and the trend in those policies. Which reminds me, today you get the FOMC meeting minutes. You should read those. Okay. Okay, so that's a big one. Put that on your list. Way more important than PPI. But PPI coming out in, is it 8/27? Yeah, I guess it's coming out now. So we should get ready for the PPI, huh? You guys excited about the PPI? Dude, I'm telling you, the FOMC is way more important, but whatever. So I'll call it out as it comes out. This is done by the Bureau of Labor Statistics. Bow. Okay, they also do non-farm payrolls. $37 million people are taking care of mom and dad. It's amazing, huh? Jimmy says, Jimmy Pauly says, yesterday I said the 10-year T-note yield was going to drop very significantly from 4.8 to 4.6, and it did. Can I continue the conversation? Yeah, it's going to drop to 4.5 today. Definitely 4.55, but on its way to 4.5. That's a big, big bullish move in the Treasury market. Huge. Okay? So James, I recommend you join investorbootcamp.com, one of the live trading groups. Probably the swing trading group is enough. It's $99 a month. It's not that big of a deal. Or you join Quant-in-a-Box.co. Okay? Did I say bullish move? I did. Yeah. Well, that's the only way to get yields down. It has to be bullish. Okay, so we got 2.7. 2.7. Let's update this. Refreshing. Come on, BLS. Let's go. 2.7 on the core. 2.2 headline. Okay, not as good as people were hoping. Wow, look at this, spinning. I'm spinning, whoa, I'm spinning. Sorry, I was 20 in the 90s. Sorry. It's all right. There we go. PPI, let's get the numbers. Okay. You guys are asking great questions. Orison says, what about dollar strength over the next coming months? You need Quant-Box. That's a very, 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 very basic question. And I can statistically prove everything over 5 years worth of data and 20 years worth of data. I can do it monthly and weekly. This is week 41, Orison. And we knew week 41 would have US dollar weakness. So I can just answer that. I'm like, yeah, well, it should be weak right now. And I know for how long, based on historical averages. And despite the risk of a new war going on in the world, dollar's weak anyways, which is really strange. But if you're asking questions like that, and in particular, if you're just going around to YouTube gurus and asking them what they think, I'll tell you this, I don't think anything. I only have the facts. Okay? And I can tell you 6 months in advance, where most average gurus on YouTube can't. So I don't have an opinion, I only know the facts. That's it. So that would be quantbox.co. If you're like, dude, that would be supremely powerful. Well, it is supremely powerful to be informed. Okay, so that's quantbox.co. The trial is $8. Okay. Anyways, PPI. So here's we can go through this, but here's the bottom line. It's higher than people wanted. PPI came out with higher producer side inflation than what people wanted. Core came out 2.7 instead of 2.3. Okay, that might bring the market down. Well, how about this, Orison? Let me bring it back. Do I still have it up? Yeah. How about this, Orison? You watch this video later today and see if you're impressed. If you're impressed, you can sign up for the trial, which is $8. In the trial, with the $8, there's a 16-hour video training course on macroeconomics. Just that is worth hundreds of dollars. Yeah. And how do I know it's worth hundreds of dollars? People paid hundreds of dollars for it. Yeah. So check it out. Get informed. Yeah. All right. So anyway, so higher inflation than wanted or desired. Okay. Energy has come down. Food has gone up a lot. And super core, well, it's not really, it's just core. Super core, you got to take out other things. But anyways, still quite a bit going on. Okay, it was 4, then it dropped into the 3s, and then you see people thought this would be in the mid to low 2s, but we're still at 3. It's higher than what people wanted. You can see the trend, 3.7, 3.4, 2.9, 2.8, and then 2.9. You're like, okay, well maybe it's just, no, it's trending up. Means the Fed might have to raise. So the big talk in the town is maybe the Fed's none and done. Well, I don't like that thought process, even though it benefited my investing. I don't believe that to be true anyway. So I never understand why people guess and think, I think the Fed is none and done. Well, I can tell you for a fact that the Fed has told us they're not none and done. They're one and probably done. We know it. It's factual. So anyway, so that rhetoric might be fleeting now, and PPI is higher, NFP is higher, and they're like, oh my God, maybe they're not none and done. Maybe they're one and done. And now they got to price that back in, and that can bring in some dollar strength. And so like looking at dollar in the moment, okay, that, the initial response to that high PPI is some dollar strength. Yeah. Okay, one of the things I've been watching in response to our tensions in the Middle East is maybe some Swiss franc strength as money flows out of the Middle East and into Swiss bank accounts. They got to get their money out while they can. Things, right? Things can get ugly quickly. So people got to move their money. So you got to pick the weakest horse, trade against it. Maybe it's Kiwi, maybe it's Aussie, maybe it's pound. Okay? But anyways, CAD had a horrible week 2 weeks ago, and then on Friday, they had some good news out of the data, and it looks like now we're continuing the weakness. So this looks very interesting to me. This top we call an MM3, and it's predictive. It's a leading indicator. And MM3 says we're going to get down to 64.5. Oh yeah, baby. That's what it says. It's not my opinion. Okay? Down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 down is one possibility. If it's going to flip, it'll probably not flip today, but it would flip in this price zone. But like I said, during a risk-off period, very often money flows to Switzerland. This is going to bother the Swiss National Bank. They don't want a strong Swiss franc. They've told us that. They've behaved in such a way that they don't want Swissy strength. And, well, nonetheless, okay. So one thing that the Swiss National Bank pays a close attention to is not CAD Swissy, but Euro Swissy. And so the Swiss National Bank wants this to go up. We have now double bottomed on support for the Euro Swissy. Okay, so same thing. MM3 predicts MM1. That gives us a price of 95. Okay, so 71 pips below us. So the down, 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 up, up, sell, down, 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 up, up, sell, down, 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 up, up, sell, down, 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 down is the idea. We're already at an extreme low for the week. But again, if this is due to duress because of an exogenous shock like war, oh yeah, we can blow through those pivots. The thing that we should pay attention to is at some point, the Swiss National Bank might want to stop this trend. So why don't we identify a price? And how about that? Somewhere between 95.5 and 95. If I'm going to read this chart, the chart says we're supposed to be done for the week. I find that hard to believe, though. I think it's going to go a little extra, right? And like that, and then we'll figure things out from the Swiss National Bank point of view. So next week's current target is here. I think this is going to adjust with a lower low, and next week's target is going to drop into here. Okay. How am I doing? Am I doing okay? Yeah? Cool. I'm going to wait until we have 40 likes. When we have 40 likes, I'll continue. Okay, thank you for that. All right, so now we have no predictive indicator here except for the yearly target. Well, the extreme yearly target is actually down here at 84. I don't know if that's in play or not. Okay, so that doesn't give us much help, but we can identify this as a potential, okay, a potential level of support. Right now on the 4-hour chart, we are neutral using technical analysis. This green line is the 200 EMA, and that's what I call the fair market value. So if you were going to be a bear, I think you want to see something like this in the future. Okay. Predict CAD yen for you? Well, CAD is weak right now. Well, let's try to answer that question. Can I predict it? Okay. There's many ways I can tackle that. But why don't we do, I guess I'll just bring it up. Let me bring it up proper. Okay? Is this bullish or bearish? Well, it's actually neither. Okay, it's actually neither, but it's trying to turn bullish. Okay? And that is acting as support. Okay? All right, so you're thinking bearish. All right, but right now it's acting, it's basically neutral. Okay, basically neutral. Okay, so you can see we have this issue here, that issue there. You are thinking down. It's too early. So if you're going to do down, I want you to look at it this way. It's got to make a lower low, lower high first. Now, you're buying yen during yield curve control. Do you know what yield curve control is? The qualitative and quantitative policy of the Bank of Japan. Okay, then you should stop trading. Yeah. Because, I mean, that's a huge part of what this chart is about. It's huge. I mean, let me go back. That's a 4 hour. Let me go back daily. Okay? And so you have to understand the context of what we're looking at, first of all. What created this move? And then if I go even further back, what created that move? And the answer to those questions, right, is the policy of the central bank. And you should know that. And it's a major reason why this went up. And it's not necessarily because CAD was good. Okay. Now, you might be planning this technically and saying, well, this number is important and it's a top and it could come down. Okay, that's fine. That's totally fine. I don't know the future. Okay, but I look at this chart, that's not bearish. And the policy at the central bank of Japan, one would think that up is the move. So you're betting against the entire central banking policy of the country of Japan. That may not be wise, but if you were going to do it, because I don't know the future either, you would want a lower low, lower high first, okay? Is that fair? Yeah, sweet. Okay? Cool. So you might want to, at least on the short run, trap it. So let's trap this. We'll take yesterday's high and yesterday's low, and you should probably wait to see at least a drop below that range. Okay? I think that would be prudent if you're going to trade against a central bank. You should at least confirm it with a lower low. Okay? Well, you have to. Mogami. It would be negligence to sell an uptrend. Negligence. How in the world could you sell an uptrend? There's only actually one thing, Mogami, one thing a bear can do. Everyone else goes broke. Okay, do you want to know the secret? There's one thing a bear can do that might lead to profitability, and everything else leads to bankruptcy. Do you want to know that one thing? Yeah. The one thing is join Investor Bootcamp. It's $88 a year. No, all right. I mean, yes, but look, the one thing is if you are a bear, the one thing that might lead to success is that not only do you wait for the lower low as a bare minimum, so now you need like, so there's your lower low. The next thing you need to do is sell the lower high. Okay? The one thing a bear can do that might lead to success is sell lower highs. That's it. There is no other thing. And every single indicator that you use, let me say it again, every single indicator or tool, whatever you use on your chart, should be used simply to analyze as a bear if a lower low, lower high has just taken place. Now, what most people do in the beginning is they look to their tools to tell them what to do. And that's a terrible idea. Okay? So you need to filter all this and say, you're a bear. Okay, I disagree with you, but we're definitely at near a top, so it definitely could happen. So now you need to wait for a lower low, lower high, and if it does something like that, then you will be short right around here. And if you do that, you might make money. But if you sell lower highs, if you're going to sell higher highs, you will lose all your money. Yeah. It's just a matter of time, whether it takes a week or 10 years. It's better if it happens in a week because it's less painful. Okay? So that's what I would do if I were me. But I don't like selling, I don't like buying Japanese yen this time of year, and I don't like it when the Bank of Japan is essentially selling Japanese yen. So I don't want to fight any central bank. I want to go with them. I want the central bank to help me. I want to help the central bank. Okay? So that's just my tude. That's just my attitude. Cool. All right, let's do the stock market. We're at a new level here. I'm going to mark this. Okay, it's still a risk area. This is a risk. That's risk. We might be above it. Maybe. Okay, maybe. I would expect somewhere along the way, something like that. So just in case if you've forgotten, let me get out of the daily. Let's go to a 4-hour. As you may recall, okay, this is week 41, and we anticipated the stock rising the beginning of week 41. On week 40, it double bottomed. Then it gapped open, or rallied open Friday, gapped down Sunday. So on Sunday morning, sitting at a Starbucks, sorry, not Monday, Sunday afternoon, I think about 6 o'clock at night, actually. I'm sitting at a Starbucks. I was out on the road, so I'm like, oh my God, I have to stop. I got my laptop, which means I have my whole entire office with me. And I run into a Starbucks, order myself a hot blonde because I love hot blondes. That's a coffee, by the way. Don't get all pissy at me. And I traded the pullback. So we have, okay, one, you have the double bottom. Okay, so this is one, double bottom. Two, you have the higher high. Okay, so two is up here. Three, you have the roll reversal. Okay. Okay. At the time, I had plan A, plan B, and plan C. I don't need plan B anymore, so it's gone. Iş kaput ya. Plan A. Okay, I bought it right there. And we're on our way this way is the idea. Now, I do believe we're going to have a pullback and a rally. And I know we're vulnerable with all the tensions in the Middle East, the geopolitical risk. I understand all of that. My stop's at break even, so I can't lose any money. So, you know, it's worth a try. And I'll leave plan C in place just in case I have to pick it up again at 42. By the way, 4,200, we had that number, I don't know, 3-4 weeks in advance, 42. And I think the next one was 4,000 as potential places I want to buy. But we also know, okay, week 41 is an up week. Whoa, whoa. Week 40 is a down week. Week 39 is a down week. Week 41, week 42, week 43, you have to know these things. Yeah. It's nice to know, though, isn't it? My teenage son made his first investment in the stock market right there. His first trade. Well, maybe his papa had something to do with it, but nonetheless, he made his first investment. $500 of his hard-earned money. Yeah. It's right here. It's at break even. See? Stop loss, delete. Stop loss, there's the order, there's the stop loss. Bum, bum, bum. What do you think, Jordan? Okay, but I think the most important thing about this is exactly what I teach at Investor Bootcamp. It's in a training course. That this is exactly what you wait for. You see a pattern like that, you wait for that, and then you'd carry it up this way. So that's the pattern taught over and over and over and over and over again. But then because I have fundamental analysis included, not just technical analysis, here's the thing. Weeks in advance, we expected something like this. Ready, willing, and able. RWA. We were RWA starting the third week of September. Third week of September is, let me zoom in. Third week of September is this period. So we enter a window here. In the third week of September, we are ready, willing, and able to buy this. And we believe the best week to be ready to do this is week 41, which is this week. But we might do it here if it gave us the opportunity. Okay? So you could have bought this and then it didn't work out. And then you bought this and it did work out. And now it is waiting. So the thing that prevents you from making the mistakes is, well, that's what technical analysis does. Okay? So I love double bottoms before you trade, a reversal. You don't want to buy a lower low, just like I was saying earlier. Okay, lower low, lower high, lower low. Do I buy lower lows? Even if I'm incredibly bullish, I never buy lower lows, no matter how bullish I am. I never buy lower lows, no matter how bullish I am. So my first thing I need is a double bottom before I can even think of it. And then what I really love is the higher high. And now I'm ruthless. I don't care if it's Sunday afternoon. You're driving around in your car. And your alarms go off. You got to pull over, get yourself some Wi-Fi, and buy the dip. Or you're a poser. I waited all weekend for that trade. I waited all weekend for that trade. I spent hours on Saturday and Sunday worried about the war in the Middle East. And so the real lesson is, I expected to be a bull weeks in advance. Then I waited for the right time frame, got it down very specifically, waiting, double bottom. Okay, that's good. Higher high. Game on. Game on. And was there the moment the market opened. Bam! And that's how you do. That's how the Wayne do. Okay? The thing is, can you wait weeks or days? Okay, now for some of you newer folks, in January, I did a presentation. So way back here, oops, delete. Way back in January, somewhere in this window, I said there are 2 times in the fall I'm going to be ready to buy the S&P 500. Okay? The 3rd week of August and the 3rd week of September. I don't know which one. I'll buy this, and sometimes it goes, but most of the time it falls. And then I try again. And I said the worst thing you could do is give up and lose hope, lose faith, because if you do that, you'll probably miss it. Can anybody confirm that? That was our conversation in January? 3rd week of August and 3rd week of September? Okay? Cool. Nice. So for everyone else is like, what do you think about this? And what do you project about that? What you're telling us, what you're declaring is you don't know a lot. And so, I was just going to say, money can fix that. You can put some money into some training or into a service, and I can fix you. Then I realized, then not everybody has money. I'm like, oh yeah, not everybody has money. But there is where's my, I have a free training video that will show you how to do it for free. I don't know if I can find it. Oh, it's probably in the description below the video. I'm not watching this on YouTube. Let me see if I can get it. Here it is. Let me cut and paste it. Guess it'll have to be on a notepad or something. Cancel. All right, notepad. Note. OneNote? No, is that what? No, notepad. Here's the notepad. All right, so this is in the description below the video. Okay, free webinar. 3 trading secrets that may triple your profits without changing your indicators and while spending less time in front of your charts, and how to do all 3 of these trading secrets for free. And there's the link. Click the link, watch the video, and at the very least, if you don't have any money, you ain't got no money, well then you have time. Okay? And so you'll understand where I can say, oh yeah, well, if I, like, for example, I mean, let's get, I don't know. So I don't want to come across, I don't know the future. Okay? I don't know the future. But I have enough information that shapes my intent. So I don't know if the stock market's going to go up here. I don't know if it's going to go up here. Okay? I don't know if it's going to go up here. But these are periods of time in which I know I intend to buy. I don't know the outcome, but I know my intent without a shadow of a doubt. For example, okay, my analysis told me somewhere around here. And by somewhere around here, I mean on this day right there. I said, be prepared for a massive exodus in which the stock market and many other markets is likely to decline. How many people know what that day is? Because I've taught them. How many people knew that day 3, 4, 5, 6 months in advance? Okay. Then as the Confucius said, I pity the fool that doesn't know. Wait, that wasn't Confucius. That was Mr. T. Yeah, that was Mr. T. But anyways, why don't you know these things? How could you possibly trade on the long run if you don't know these things? It should be like this massive gap just opened up in your knowledge. And you're like, holy smokes. So you're good with MACD and RSI and stochastics. You love your moving averages. Good for you, brother. Good for you. That's a good start. But now there's this whole world. Now I've lifted the frog out of the well, and you look around and there's a whole nother world. What do you choose to do with that knowledge? I don't know. So, I don't know. So anyways, I got to go. I have a busy morning. I am putting lipsticks on the pig for the stock trading course. It's done. I'm reviewing the slide deck one more time, getting my notes all together, getting all super jazzed and stuff. This is your, right? You can join. It's today at noon. So in 3 hours, we're doing lecture 3, which is what? Hour, 3. Yeah, so it's probably going to be hours 4 and 5 that we're going to do today. You should join. It's good. Okay? It's good. You're going to learn some very complicated math, and you're going to be able to impress people you know. You'll say, look at what I'm learning, and you'll show them, and they'll go, oh my God, those are weird, funny, gobbledygook symbols. Yeah. But the thing is, you don't need to know calculus. I'll show you some funky math, but at the end, you will get to a number, and I will associate that number through the hard work and analysis, financial analysis. You'll understand what the number means, and you will then be able to look at these numbers when analyzing investment opportunities. And it doesn't even really matter right now when I'm teaching you, like if it's a stock, if it's a bond, because I've covered bonds, we cover arbitrage, that kind of stuff. But you could compare investing into a Forex trader, buying a particular stock, or maybe investing into an apartment building. And by understanding the math, maybe you can't do the math, maybe you can, but understanding the math and the logic behind why you would do the math, you can look and determine what the best investment opportunity is. How would you like to know that? Yeah. So today I'm really excited to introduce a new concept, and I said it before and I'll say it again, this thing called beta. Beta! Beta's the best believe it's the baddest. So anyways, I'll see you in 3 hours. Actually, less than 3 hours. Okay, you can join now, and I'll see you then, and then you can spend the rest of the week watching the first 2 videos. Peace on earth. Hang on, where'd my software go? Where did it go, actually? I can't even confirm this is still running. Where did the software go? I can't even... How funny. My streaming software, where did it go? It's not there. It's not... Oh, that's way over there. All right, so let's switch over one more time. It's super important now. It's always important, but it's super important now. Peace on earth, everybody. Peace benefits everybody. And if we can work together and trade together, that lowers inflation. That raises the standard of living. And so I wish everybody peace on earth. May the pips be with you. May our profits be above average. I'll see you when I see you.